No one wants to take a big tax hit, but if you're thinking about selling a significant asset, we're talking a business, valuable real estate, or even stocks or cryptocurrency, you're going to face a capital gains tax. But what if there's a strategic way to possibly minimize that upfront tax hit? Gabrielle Phifer recently sat down with a financial planning expert. Here's what she learned in this sponsored segment by the Pension Group.
And joining me to talk about being strategic so you can minimize your tax burden is Mike Martinez from the Pension Group. Thanks for being here, Mike.
Great. Thanks for having me.
Yes. All right, Mike, we're talking capital gains taxes, which can be very daunting. Is there a solution to defer those large tax bills?
Well, certainly there's ways, but you need to work with a qualified professional that really understands it. It's a deferred sales trust is really a DST is what we refer to it. So, if someone has a highly appreciated asset, let's say they own a business, there's a business owner, maybe they're going to sell their business, or maybe you'll have crypto, or maybe you have one in a specific security. Maybe you own a tech company. There's been a lot of tech stocks going up a lot this year, well over 100%, and people have high concentrations on certain positions. But the problem that wealthy individuals run into is I don't want to sell it because I'm going to run into a situation where I got to pay capital gains, and that could be from 15 to 20% in value. You end up losing to paying capital gains. So what a DST trust allows someone to do is to put the money in a trust. You have to work with a qualified professional. A lot of advisors don't get into this, but you have to have CPAs as well as attorneys that can structure these, and it allows you to take that highly appreciated asset, let it be a business or a security or crypto, whatever the case might be, and you're basically putting in the trust, and the trust pays you an income from the trust. So, but the difference of it is, someone else, purchases a security inside that trust, and as the income comes out, you're only paying a very small portion of capital gains on the income. So you're not paying on the whole amount. So if you had $1 million, $2 million in gain, you're not losing $200,000 to $400,000 up front because we're spreading that over a period of time. So that's really what a DST trust allows someone to do, but it's someone that's going to have a highly appreciated asset, like they own a business, or they have a security, or a lot of people are starting to get in crypto. They're starting to see a lot of gains in that, but this is a way to minimize the capital gains, or I guess more importantly, stretch that over a long period of time to provide income.
Do you see a lot of clients who are maybe unfamiliar with this process, and you help them through that?
Yeah, it's not something that the average advisor is going to get into. I guess is the biggest thing we come across. We get into some very high-end tax planning strategies for people that have $3, $5, $15 million or more. We can get into some very creative tax planning strategies. Again, we have teams of attorneys, CPAs with masters in tax. We have the professionals that we utilize to help our clients minimize their taxes and structure things properly. Again, working with a team of people, I've been doing this for 28 years now. That's important to a lot of people. You can't go to the typically the bank. They don't get into these strategies. You're not going to get into like an Edward Jones. They don't get into these complicated tax strategies. Again, we have those professionals who are CPAs, attorneys with masters in tax, that certainly can change someone's tax perspective and show them ways how to save money in taxes. And this is just one of the strategies that we can utilize. Do
a lot of people use this strategy, you think?
High net worth individuals do. Someone that has, $2 million, $5 million, $10 million or more are utilizing these strategies. So it really depends on our viewers here today. If that's you and you have a highly appreciated asset, or maybe they're looking at, selling a business, this is a way to help minimize or reduce capital gains. And
like you said, do you have a whole team that can help with this, right? How can someone find out if they could benefit from this?
Well, certainly I would say for them to give us a call. We'll sit down, complimentary consultation, of course, talk about their situation. I've had business owners where many years ago, when I got in the business over 28 years, we had a veterinarian who we helped sell his practice. We used a charitable remainder trust back then. He wanted to benefit Ohio State University. And this is a way that he could sell a portion of his business, and he put that into a charitable remainder trust, and we avoided all capital gains. So again, if someone maybe doesn't need all the money and they have charitable intent, there's other ways we we can get into it, but these are just two of the ways. I bet we have over 20 different tax strategies that we can help. And with our staff of 12, we're certainly here to help our clients, and for those that are looking at other options, try to evaluate what are the best strategies.
Nice. So if you want to explore a deferred sales trust, just reach out to Mike and his team at the Pension Group. Thanks so much, Mike.
Great. Thank you.